Welcome back to another episode of the Backholder Pod. So today Eric is sadly down with a sore throat, so he wouldn't be joining us. But I think the show need to carry on. So I think for our persistence, please help smash the like button because we have been very consistent with our uploads as well. But I think the biggest hit this time around is really Tesla just reported the numbers, I think just last night. So even though Eric, the biggest Tesla bull, is not here today with us, we still have the other two bulls to hold the conversation. So I'll pass the time over to Bunti to maybe draft some context for Tesla's recent delivery numbers and whether is it good or bad.
Thanks, Chicken. This is actually my own tracking. Basically, I have this spreadsheet to record down how much is the past productions, past delivery, and you can look at the numbers here. Right, this is 2023 Q2, the latest quarter. The result was just released like few hours ago. So you can see that if we compare like just year over year, right, meaning the same quarter Q2 versus Q2 last year, the delivery numbers, right, is 466,000 over 254,000. So this is like 83% increase. You know, when companies grow by almost 100%, that means it's like almost double within like 1 year. But you need to remember that during 2022 Q2, that was during the China lockdown period. So their quarter-on-quarter growth last year was actually negative, right? So this is like a very low base. But even so, if you compare like just 1 quarter ago, which is like 423,000 delivery, it's still up by 10%. I recall I read some news article. It says that the consensus, the estimate, right? People are expecting about 445,000 or some expecting 440 or even 450,000. So definitely 466,000 delivery per quarter is really impressive and it beats the estimates. So I think this is a good results for those who are buying Tesla because they are expecting a high growth, right? We definitely can see that still over the past 4 quarters, their growth is close to 50%. It's at 47%. So I'm very pleased with the results, and I saw that I think the share price also reacted positively. But the share price movement really depends on because currently it's like based on the overnight prices, right? It may not be representative of what's going to happen when the market open in US time now. I think that's overall of the results. And if you just quickly look at the charts, right, both delivery numbers up, deliveries and production numbers are up. So just in one chart, you can see that the result is really, really good.
So this chart is by Troy Tesla. He's tracking the order backlog in units. Ever since Tesla started cutting its prices and building another new factory, the backlog has been dropping and remains stable ever since. So now it's sitting at 59,000 as of last month. I think that's a good news because there's obviously still demand after Tesla has cut their prices and it's not going back up. Then the other thing is you can see that a lot of the cars come from Shanghai because it seems like the capacity for Shanghai to produce cars in Shanghai is a lot higher. So they are producing cars there, then shipping it elsewhere to meet the demand. So I think this is good news for Tesla overall. I wouldn't be surprised if Tesla starts to go back up tonight. It has been going up a lot already, but it might continue to go up, or people might start selling the news.
Okay, I noticed that this Troy Tesla really have quite a very good reputations when it comes to predicting what's the delivery numbers for Tesla. He himself doesn't own Tesla, if I recall, but the numbers are usually quite accurate. But even so, right, I recall that the 440 something thousands, right, that's actually the numbers coming from him. Means that he actually underestimated the delivery numbers. So that's why I would say it's like really a good surprise here, positive surprise, because even the one that is like quite reputable in providing all these underestimating the actual results. This is not about like, okay, all the Wall Street analysts that are you know, like come up with some numbers that we don't know how they come up with, and then basically it's something some analysts that people respect. Yeah.
In terms of, I think for backlog wise, right, it's currently sitting at all-time low, as Kelvin has shown the graph, right? So at least now, I think it's still on track in terms of the 50% year-on-year growth rates and how they can deliver the numbers. Actually, I got one question, right? Do you guys have any expectations in terms of from a higher base? Because I think Tesla has crazy level margins compared to many other automakers, right? Do you guys have a rough sensing or rough estimate on what will translate to the bottom line on Tesla numbers in the upcoming financial year?
I think my expectation is that the margin, right, will be similar compared to the previous quarter. The reason is because I don't see they have increased their prices since after they do all this like discount price cut, right? It has stabilized at that level. And I recall there's still some small price cut in between. But you know that there's price cut and then offset by some increase in the delivery numbers, meaning that all the, how to say, the operating numbers will get better as the company is scaling up, right? So I think it should be more or less offset each other. So I think it is stabilizing. I don't expect a huge increase or huge drop if we just focus on the operating margin numbers.
Other companies joining the Supercharger thing, like how much will it contribute to the bottom line?
I don't think it's going to be that soon. Probably it's not going to be contributing anything even for the next 2, 3, 5 years. I think this is like a very long-term kind of trend whereby all these different manufacturers, they all unite and say we need to like adopt the same standard, because it should actually benefit everyone's. It's just that by having like, but being the one that set the standards, I think will have a lot of benefits to Tesla, but it's not going to be like in monetary terms within like short number of years. That's my expectations. But I think our co-host Eric, he seems to have very different opinions on this. He's very bullish, but wait him come back to the shows and let him explain. I can't explain much on that.
I think also to circle back to the margins number, just for context, for people who haven't been following, I think the previous quarter, the operating margin is 11.4%. So I would believe that in the ballpark, it should be also maintaining or hovering around the 11 to 12% mark, comparing to the previous 16 to 19%-ish over the last financial year in 2022. So yeah, that's just some context. Personally, I also don't think that the Supercharger is going to be substantial, at least not in the near term. But I mean, I'm moderately convinced by Eric's argument, because I think they had a debate. Eric and Bunti had a debate on whether Supercharger was going to be a game changer. Eric seems to be extremely bullish about the onboarding of other automobile names and the entire ecosystem itself. So we will seek to explore in the further upcoming quarters. But yeah, I think generally still a relatively strong performance from Tesla, and nothing falling short of expectations. Unlike many other growth stocks, actually. So the funny thing is, because automobile or cars in general is a high ticket item, right? Does this actually translate to meaning that a recession is cancelled for the global economy and we are back into a bull market? I think I just wanted to seek Kelvin's perspective and speculation on this part.
It feels like it's cancelled. So I one theory is that you know that's the U curve thing. It has been going below zero for a very long time now. My theory is that this U curve thing is just the result of the Fed raising interest rates too fast. So because of that, like the short term yield goes up very fast, while the long term yield doesn't go up as fast. And it doesn't signal a bad thing to the economy, because obviously it seems like everything is back to normal again. So it's very similar to the, like in the 2020, when the unemployment rate suddenly shot up to over like 10+%, but after that it immediately normalized back down. That's because we are starting from a very low base and jump to a very high unemployment rate. That's why there was a big jump. So that's the same thing for this U curve thing. It feels like previously the interest rate was very low. Then suddenly, because of the Fed pumping up the interest rate to very high, everyone saw that all this short-term interest rate was very effective, was very attractive. So they all dumped their money into it. So that's what caused this U curve thing. Personally, I think that this recession, it won't be bad. Even if it happens, unemployment rate still remain low. Inflation going down slowly, but it's still going down. And I don't see any bad catalyst coming in this year.
But let's say if we just focus on Tesla, right? I'm still thinking like if we just look at the economic numbers released over the past week, it seems that on the US side, right, the economics data are showing like very positive numbers. There's one market also like churning up a fair bit over the recent 1 or 2 weeks now. So, but actually this like inflation things, I think it's still bad because Jerome Powell, he had also mentioned about like he don't expect the inflation number to come down to the number that they want to see anytime soon. That's why there's a like a one meeting's pause in hiking rates, but then now everyone expecting there will be a further hikes down the road. The question is more like, okay, for this Tesla potential buyers, if the interest rate continue to stay so high, are they able to, like churn out like 500,000 of cars every quarter for the next 1, 2, 3, 4, 5 quarters and continue to sell all these cars? I think that will be my concern, because as the interest rate, right, they will really like, that's the part of the cost of the car ownerships, right? Unlike in Singapore, we still have another layer, which is the COE. But for those who are in US, I think this interest payment is still quite high. So I really have some concern on whether they are able to continue to increase their production by 40 or 50% per year and still like sell every cars they have at current price. Because another situation is that they might still have to like lower their car price in order to just clear their inventory. So, and then that will hit their margin. So I don't think it's like everything is positive. We need to be aware where are the risks and then just act accordingly.
So my question is like, right now, isn't it like indicative of what's already happening? Like they have low backlogs, they beat the delivery, I guess. And the interest rate is near peak already, ma. Like what else is there to be worried about?
If the interest rate is now, I think, let's say one more hike and it stays there for like 3 or 4 quarters, right? Actually, we don't know how many more people will actually buy the new cars, given that it's still very expensive when it comes to interest. But in the recent 1 or 2 quarters, I think that's also because they have benefited from some EV credit. That's the one actually helped with their sales of their cars. But all these benefits, or all these kind of like one-off benefits, right? After that, it will taper off in terms of the effects, right? So as you compare like quarter to quarter, can they continue to sell more cars? That's my concerns. And by more cars, it's not like 5% more. You see, just comparing last quarter versus this quarter, it's like 10% more. Can they sell like 10% more cars next quarter? Given that this quarters, right, it's like all the EV credits there's already the EV credits. There's no more increase in incentives. You get what I mean? So that's why that is my concern. It's more like a short term, or over like longer one, like let's say 2, 3, 5 years. I don't think interest rate is going to stay like at this level for like 3 years, right? So that if that's the case, I think I actually quite doubt whether they can continue to grow at this rate. It's not about their production capability. It's more like are they enough consumers, like rich consumers, to keep on buying new cars? That's my concern.
Actually, this whole recession discussion is quite interesting. Of course, we keep saying that it's entertainment purpose only, right? But actually, I do see a lot of people, whether it's on YouTube or Twitter, people have been actively trying to speculate. By speculating, they are backing capital, meaning they try to short the SPY, they short the QQQ, they buy put options or whatever they do. But interestingly, the market just seemed to go against everybody's expectations. I'm saying that credit card, I think spendings now, or the debt that are on credit cards, are at all-time high, savings rates are at all-time low and stuff. But companies continue to keep churning, keep selling products, people continue to keep spending. That's why it does seem like what Buffett said, don't bet against America, because regardless of whether you know the economic data beforehand or not, you can't speculate where the market is going to go. So yeah, I think that's just my 2 cents on that. If not, I think generally we don't really have any more comments on Tesla specifically. If not, we will end off the video here. Bunti and Kevin, any more comments? No? Okay, yeah. Hope you guys enjoyed the discussion on Tesla. If you guys have any more expectations on, or specifically if there are bears out there that still think that Tesla can't deliver the growth rates, feel free to leave in the comment section down below as well. Yeah, we'll see you in the next video. Goodbye.